Okay, well, are we guys ready to go?
Let's do it.
Okay. All right, listen, everybody. I've been told by Marlon I can't turn on my camera and you can't see my beautiful smiling face. But that said, I want to welcome everybody to the MrTopStep NOFT webinar presented by Troy Epperson. Troy has been with NOFT since the company's inception over 7 years ago. I got to speak to him today, so I got to know him a little bit, or he got to listen to me, one or the other. But anyways, he's been trading professionally or privately for the last 20 years. He told me first he's a trader, second he's an educator, and he's never a marketer, which I think is a lot like me. I mean, I may talk a lot, but we don't do a lot of hard selling. A lot of people know that about us. He trades almost every day in all the markets. He is a contrarian trader like me, although I like trading the bull side. I do like buying the dips or buying the falling knives and selling the rips. His presentation will be about order flow and tape reading. Now, that part of it is very, very interesting to me because, currently he mentors and trains hundreds of students, and he says he really enjoys interacting with fellow traders. However, if he said it all disappeared tomorrow, he would still be a trader. I imagine he would, Troy. But anyways, real quick, before Troy takes over, I want to talk about Troy's philosophy. It's a lot like mine. Um, I've said it hundreds of times that the pit bull, one of the great things about Marty Schwartz, the pit bull, is that he was best known for his tape reading. And he was an analyst on Wall Street for a couple of big firms and didn't really get along with management. Ended up getting a membership on the Amex, and he was a huge tape reader. In fact, one of the funny things that a lot of people don't know about this is when the pit bull when he really felt strongly about something, he'd get real nervous. He was a market maker in IBM, and when he would get a idea, say going into an earnings, like going into the earnings, say like IBM, if he had a really good idea on, he would get so nervous he'd put a brown paper bag over his head and walk around on the trading floor, and then people would know, hey, Marty's got something hot going on. But actually, that's a true story. He used to wear a paper bag on his head. How weird is that? See a guy walking past me on the trading floor, he's got a brown paper bag on his head. I think you'd think he was nuts. But that said, that was his way of getting rid of some of the nervousness. And I don't know, in some way, I think tipping off other traders to kind of what he was doing at the time. But anyways, um, Pitbull has been best known for his tape reading. And one of the things that I've always talked about was when I was in the S&P, I believe that tape reading has a little bit to do with pattern recognition. And Troy will talk about all this stuff because I'm really interested in listening to his presentation tonight. But on the trading floor, I didn't really have charts. I followed the premium levels between the S&P cash and the S&P futures because I did a lot of program trading, index hard. But I also got to look at the last 7 trades on the board at the Merc. And after repeatedly looking up at the boards and seeing the prints and seeing the volume moving around, I got a good feeling for how to read the markets. And even today, I still read the markets pretty much just off my charts, pretty much based on volume and overbought and oversold conditions. I try not to add too much into my formula because one, I'm not smart enough, but two, it tends to work for me. Reading what Troy says is reading the tape, and I read the prints, the volume that trades on each print. I follow everyone all day long, and that's how I do it. But anyways, I want to thank NOFT for coming in today. I want to thank Troy for being here tonight to explain what he does and how he does it. And Troy, I'll let you take it away from here, and we'll be waiting to hear your presentation. Best of luck, and thank you very much for coming in.
Thank you so much, Danny. Can you guys hear me okay? Do a quick audio test here. Put a yes in the chat if you can hear me. Not hearing me? Yes, you are hearing me. Okay, all right. All right, so just sit back for the next 40 minutes or so. We're going to talk about trading. One of the things you're going to find out about me is that I am not a marketeer. So I hate the pitch part. Okay, so I just tell you that right up front. There will be a pitch at the end, and we're going to do a pitch at the end, but the majority of this time together is going to be about decoding order flow. And here's a link to the product. It's called the Order Flow Pro. We normally sell it for about $3,000. We're discounted for special webinar prices. It's only good for the next 48 hours, I believe, is as long as they accept this price at $9.95. So it's a good deal. Again, there is the and I went ahead and put that in the chat as well. Okay, so that's all the pitch we're going to do until the very end. So the rest is all fun stuff. So let's go ahead and get going here. So the NOFT is both a system and a method. So what I mean by that is that we have a specific system that goes along with our software. But that being said, the software will stand alone. And so one of the great pieces about this software is that you don't have to do our system. You can do the system that you currently have. So I don't care whether you're a Fibonacci trader, you're a moving average crossover, you've got some, well, we have one guy that does nothing but astrophysics and the guy has got the star charts going on. I don't understand any of that, but it doesn't matter. He gets a signal and he can then verify it with the NOFT software with order flow. So we're going to go through all of this. We'll have just a little bit of fun here. So number one, we want to look at trade locations and trying to figure out where the best trade locations are. That's the starting point. So whether that you're getting your trade locations from a Fibonacci number or from a black box, it doesn't matter. You've got a place where your system is saying, hey, I want you to buy here or I want you to sell here. And sometimes they'll give you those prices ahead of time. So like in a Fibonacci number, we know where those levels are ahead of time. Or it may be where it's giving you like a black box that says just buy. It doesn't give you any level. It just says buy now. Well, the trade location, that particular spot, is the time when we need to then evaluate, do I really want to take this trade or not? So whether it's my trade location, whether it's a Fibonacci number, doesn't matter. Once I have that level, I need to ask the question, do I really want to take that signal? Because in the end, we try to be systematic traders, but most of us are discretionary, and it's really hard to follow a system, especially if, in fact, I read a statistic that if you're following a system and it has 3 losing trades in a row, you will abandon, 95% of people will abandon the system, even if the next 7 trades are winners. So the overall statistic was 7 out of 10, but if the first 3 are losers, nobody will stick with that system. Okay, so very much, even though we try to be systematic, we end up being very discretionary, and this allows us to determine or filter or confirm that we actually want to take an entry. And that's with the order flow. Order flow becomes absolutely key to saying, yes, I want to take a trade. No, I don't want to take the trade. And so again, I'm going to show you what we use to find our trade locations, how we use the order flow to confirm our trades, and then how we use the order flow to manage the trade after that. Now, one of the things I want to make sure you are fully aware of, this is a contra trend system. So when the market is going up, we're looking for shorts. When the market is going down, we are looking for longs. Now, that being said, we have that's our primary system. That's our primary method. However, we do have a follow the trend add-on to this. It's all part of the same software, just a secondary method within it. So you can trade using this order flow to get on the side of the trend as well. So you can go in both directions. It's certainly not skewed to one way or the other. So I'm sure some of you have seen systems lately that were really good on the long side and made a lot of money over the last 6 months, but suddenly now when we're in this little bear movement to the downside, that system suddenly stops working. Well, with this, you're going, I go both directions every single day. I love the short side, so I definitely tend to love to be on that side, but that doesn't mean I won't take a long. And many times I would actually, when you look at my trade blotter, about 73% of my trades are short and the other, 27% are long. But I do a long trade at least once a day, usually, even though it hurts me greatly to go long. And you guys who are short traders know exactly what I'm saying. Once you get kind of in a groove, it's hard to go the other direction. But so first we're going to talk about trade location, finding out, because this is knowing where to trade. Now, every day I look at levels that are pre-market, so I know where I'm going to trade. I know the prices that I'm going to institute a trade at. Now, I just have to wait till price gets to those levels. And here is an example of a regular candlestick chart where I have some levels identified on the chart. Now, what's really cool is that we develop these levels and actually push them to your chart. So you get to use my levels every single day. It just automatically pushed to your chart. That's very cool. And this is in NinjaTrader. Our primary platform is NinjaTrader. We also have a version of this that is for TradeStation. So those are the two platforms that we currently have this software for. We push this to your site, and then what we do is, one, you can see how many times it bounces. So it bounced right there, bounced right there, bounced right there. That one blew right through it. That one, it sort of came right up to it, stopped, came back, blew through, reversed, 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 blew through, reversed, reversed, reversed. These are good levels all by themselves, but I'm never going to trade just the level by itself. Just like you would never say, I'm going to sell every single 61.8 Fibonacci or 38.2. Not going to just blindly trade these levels. I'm always going to confirm the entry using order flow. Here is an example of some of the software's ability to identify an intraday level that is of interest. So it's found something over here and it's projecting out this level. So when it comes back to it, you fade it and take that trade in that direction. And this is just an example. This is an internal intraday signal. I prefer to use those entry lines that were on the previous slide because those are big picture levels. But for scalpers, sometimes we need intraday signals as well. So this will give you intraday signals. It will work for swing trading, scalp trading, and what I call regular day trading, where you're in a position for 30 minutes to an hour. Versus scalping where you're in it for 10 seconds, versus a swing trader where you're initiating a trade, walking away, and 3 weeks later, taking your profit or whatever. It is adaptable. That's the beautiful part about this. I don't have to tell you how to trade. I just need to show you how to trade better using whatever system you have. And that's what the order flow is for. It's knowing when to trade. So the first part is a trade location, tells me where I want to be trading. Then I want to know when to trade. And that's the order flow. And this is where it gets really, really exciting. And just like Danny was saying at the beginning about Marty Schwartz, so true. The best traders in history are the guys who have been able to learn how to read order flow, read the ticker. Well, this is going to date me, and I apologize for this, but I can remember there was a Wall Street Journal headline, 100,000 contracts traded for the ES mini contract on Globex. It was a big Wall Street Journal. It was all over the place. This is quite a long time ago. 100,000 contracts. Okay, now fast forward 20-something years later, and you're talking about 2, 3, 6 million shares, million contracts that are being executed on what was a very small platform. Looking at time and sales, when you're looking at 100,000 contracts a day, you can actually figure out how to read order flow with time and sales. Now, it's a totally different story. That time and sales is scrolling so fast that it's very difficult to make heads or tails as to what is going on. Is price going up? Is there aggressive buying? Is there aggressive selling? And what we're going to do is we're going to take time and sales and we're going to put it in a format that is actually usable to allow you to read the tape like you've never seen before. Now, I use this shot here to show this is what 97% of all traders use, a candlestick chart. Now, you can be, this was a 30-minute, 5-minute, whatever. Most people use a candlestick chart. That's by far the most popular method to chart price is through a candlestick. So what are we going to do? We're going to do something different. We are going to use what we call a footprint chart. Now, a footprint chart is still a candle. So here is the body. So we've just taken a regular candlestick and we sort of exploded it and magnified it. So here I'm seeing a candle. Okay, so that's the body. Obviously, that's a candle wick or a shadow, or, and some people will call a tail if it's at the body. We have a candle, but we've cracked it open to see the numbers inside. So we can see how the candle was actually formed. Now, think about this too. You candlestick guys, you pattern recognition guys. Candlesticks, almost all candlestick patterns take 2 to 5 candles to define a pattern. So if you're looking at this, you're probably getting short somewhere over here in the 3rd or 4th candle after it has already turned. And that would be a good entry, right? Well, how would you like to be right up here at the very top? By watching the order flow, we're going to be able to get you in way early. I have multiple traders that work with me. We shoot for 3 to 5 ticks from the actual turning point. So we're getting in 3 to 5 ticks right up in here after the turn. That's amazing that you're able to actually do that. So let's talk about how the numbers inside those candles are gotten. So we have a price ladder over here. Okay, you remember some people call this a pricing matrix. This is a super DOM, and this has got the bid and the offer and the last trade, and it's got all the orders on the bid side, all the orders on the sell. Not all, but the first 5 levels. And when a trade happens, it's going to go. Let me see if I can turn my pen on. And it's going to go from here. Let's see, is that? Nope, I didn't go there. Let's see if we can do this. It's going to go from here over to time and sales. And then it goes from time and sales. Let's see if I can do this again. Not going to let me. Come on now. Having trouble with the pen. Let's see if I can make this bigger. Not helping me out here. All right, so we'll just use that. Let's turn that off. We will just use the mouse. So it flows from time and sales, or here's where the execution happens. It gets reported in time of sales. You see that 4539, one contract. That one contract then gets put, it's green, which means it was executed on the offer. This is very, very important. This seems very basic. This will make sense in a minute. It's executed on the offer, one contract. 4539. It goes in this box right there with the 4. In fact, you can see the 3 and the 4, 3 and 1 at that price goes into this box. So we take the candle. This is a candle, remember, from the previous screen, and we put numbers in at the price where the contracts actually execute. Whether they're on the bid or executed on the bid or on the offer determines where they are inside the candle. So left-hand side is all the executed trades that come on the bid. Right-hand side is all the trades that execute on the offer. So you're saying, okay, Troy, big freaking deal. Who cares? All right, well, let's talk about that. What does it mean when a order is executed on the bid? What does it mean? It means that somebody is sitting on the bid with a passive order and somebody on the sell side got antsy. They said, I'm not going to wait till they take my offer. I'm going to hit the bid. And they aggressively hit the bid. They take the bid, okay? They're hitting the bid. So anything that executes on the bid side is what? A aggressive seller is the behavior that actually happened there. Consequently, on the offer side, okay, so for price to go up, I got to take out at 45.40, there's 10 contracts there. I got to take out those 10 contracts for price to go up. But those guys are passive sellers. They're sitting there waiting for somebody to execute their trade. Who hits the bid? Who hits the offer? A market order. Somebody who is really, really, really anxious or not patient. I want it now. They hit market buy. What do? They're taking the offer right there. Okay, so now we can take this information, splitting up the candle, and see behavior. Now, this is the crux of the beauty of what we do with NOFT is we're not just charting price and time, we're charting price and behavior. So if I can see the behavior, what happens? Price will follow. Just think about it. If I see somebody taking 45.40s, the number's getting bigger over here, but price hasn't gone up. But I can see that the aggressive buyers are executing trades because they're taking the offer. Price hasn't moved. Okay, so all you guys who are price action guys, you guys are behind the ball. You're behind. I can actually see the buyers buying aggressively. I can see the sellers aggressively selling. Huge, huge difference. When you're watching time and sales, you've got to watch the color, the amounts, whether it's a bid, whether it's the offer. And this is scrolling at literally hundreds of contracts are screaming by over time during the day. This is a crude oil example on the CL here. Unbelievable. When Marty Schwartz was trading, there was enough volume that he could follow time and sales. You could, if Marty Schwartz was here today, he'd be like, how the frick am I going to be able to look at time and sales when there's 6 million data points that are flowing by in real time? I mean, are you kidding me? So we've got to change the way tape reading has traditionally always been time and sales. We've got to figure out another way to do it so the information gets consolidated in a way that we can actually read what is going on. And that's what this does. So it takes time and sales information, we split it up into bid ask, give us a behavior. And why is this important? Why is knowing behavior important to us? Okay, I'm gonna set the stage here. I want you to think about it. I have a 9-year-old son, and we just had Halloween. Okay, so last night after he did his trick-or-treating, he had a big barrel, a big barrel of candy. We spread it all out on the table. He collected the ones he wants, the one he doesn't want, and we put it all into a bag. And I took the bag and I put it on top of the refrigerator. I said, okay, that's where we're going to keep it. You cannot have it. You can only have so many pieces per day, right? And it's up top of the refrigerator. He can see that. Now, if you don't have kids, maybe you don't understand this, but the bottom line is that his behavior is completely predictable because he's human and he's a kid. So you know what's going to happen. As soon as dad's not in the room, the chair from the table gets pulled out. It gets put over by the refrigerator. You know, he climbs up on to get to the top of the refrigerator to get candy. Okay, that is a predictable behavior. Yeah, he climbs up on the counter. You got it. You name it, okay? There's nothing going to stop this kid from getting to the top of the refrigerator and getting that candy. Now, this is completely predictable. Well, as an example, if I can see the behavior that's going on in the market, then price movement is then predictable. Again, this is going to give me a gigantic edge as to when do I get in. Okay, well, price is coming down. Price is coming down. Do I buy? When do I buy? Well, I wait until the sellers get tired of buying and buyers, it's gotten too cheap. Okay, so sellers are slowing down and I start to see buyers coming in because it's become cheap. And the discounters, the bargain hunters are coming in. Well, guess what? At the bottoms of these candles, I'm going to be able to see based on the numbers that the sellers are slowing, the aggressive sellers are slowing down, the aggressive buyers are starting to pick up steam, which means I'm going to get an entry 2 to 5 ticks off this bottom, and then it's going to go from there. Okay? So let's review just a second. Aggressive buyer hits the offer equals impatient buyer. This is the guy who makes price move. Okay? The buyer that sits on the bid does nothing. He is not moving price. He's completely passive. Now, it doesn't take a rocket scientist to look at this candle here and just glance at it. I can just glance at it. Are the numbers bigger on the right-hand side on balance? 19 to 12, 28 to 1, 5 to, okay, not that one, 13 to 5, 21 to 4, 22. On balance, there's more aggressive buying going on here than there is aggressive selling. Well, golly gee, it's a green bar. Price is going up. Whole nother level of reading what is going on. Now, of course, we've got bells and whistles. We've got more bells and whistles. You can't imagine all the bells and whistles. The blue numbers. This is comparing aggressive buying to aggressive selling. So you're always going to compare these diagonally. So when price was at price, whatever price it was, the smaller numbers the bid, or I should say the bids on the one tick below the offer. It's always that way. There's always one tick between. So we always compare these diagonally. 22 aggressive buyers versus only 4 aggressive sellers. 21 versus 5, 13 versus 8, 5 versus 1, 28 versus 12. Who is winning the war here, the aggressive buyers or the aggressive sellers? Just by looking at the numbers alone, the aggressive buyers are well ahead, therefore price is going up. Again, left-hand side is the bid, right-hand side is the offer, and these are executed orders. Now, I bring this point up that it's executed order because there's a lot of guys out there that think the super dom or the price ladder or the price matrix is the coup d'etat of tape reading, where you see all the orders. Guess what? 85% of all orders that are placed within the market at any given time are canceled prior to execution. Okay, I'm going to repeat that because that's nuts. 85% of all orders that go into the order book get canceled prior to execution. So that means all the numbers you're seeing on that super dom are complete and utter garbage. It's garbage. So don't waste your time on the super dom or on the order book because we cannot tell what is going on based on that. Why do we only look at executed orders? Because that's where the real money gets transacted. So no BS. Oh, so I see a guy who's got 1,000 shares or 1,000 contracts, and then price starts going up, and suddenly that 1,000 contracts gets pulled. You're like, what? There was a big seller there. No, there wasn't. That guy was complete baloney. I'm sure if you've been a trader for very long, you've seen that happen. We look at executed trades because that's where somebody puts their money where their mouth is. That's where the rubber meets the road, okay? An executed contract. We actually put real money to work. Is that going to be better data than the potential order that may be canceled 5 seconds before price gets to that price level? Yeah. Okay, so here is a sell side. So the bid side, these are executed on the bid. That means an aggressive seller doesn't want to wait around to see if he'll get a fill on the offer. He doesn't worry about it. I'm hitting the bid. Boom. He hits the bid. We start having volume on the bid. What's going on? Aggressive sellers are stepping in. Where's the aggressive buyers? Look at the numbers. This is just basic numbers, 12 to 11, 11 to 1. Okay, they're much bigger on the bid side, and therefore there's price movement to the downside because aggressive sellers are going to move the market. The aggression is the behavior that we're trying to track here. Okay, it's not just volume. Okay, because volume happens on both sides, aggressive buying and aggressive selling. We want to know the difference of that. Who is winning, the aggressive buyers or the aggressive sellers? Constantly asking the question. So now here's where it gets really interesting. Okay, so this is a 15-minute chart. ES, old chart, doesn't matter. I've used this style every single day. Use this method every single day. Price starts coming up here towards my trade location. Now this could be your Fibonacci level. This could be your magic box trade level. Don't care what this level is. Your method. Yay. Price is coming up to it. So a lot of you guys are going to say, okay, here's my entry point. I'm going to go long. If price gets up here, it's going to break out. Okay, so you're patiently waiting for price to get up to this point, and then you're going to go long. Okay, you see all of this going on. Green bar, green bar, green bar, green bar. Am I going to go short? No. Are you kidding me? Why would you go short after seeing those bars going? This thing is going to the moon. Yeah, baby, this is a beautiful trade entry spot. My black box said, here, take a long when it gets to here. Now, if you were using order flow with a footprint candle, as price comes barreling into this price level, I get red. Okay, now it's very important to understand that red and green are part of the candle and how the candle is developed. But it's particularly interesting when it's at an inflection point. So when it gets to your trigger point, then I want to look at order flow. In the middle in here, I don't care if there is red on these. Don't care. I'm only interested in this trade location area where this is an important number. It's either going to retrace off this level or it's going to break out, one or the other, right? And this is going to allow me multiple opportunities to go in the right direction around this trade location. As price barrels in here, I've got red. Now, I know it's hard to see, but if you look at the numbers inside, you have 76.52. That's the number of contracts at that price, 23.74.912. What is going on here? What side of the candle? That's what? The ask side, which is what? Aggressive buyers, because they're taking the offer. So now you have aggressive buyers on this level. There were 7,600 contracts. The next level up is more expensive, 2,300 contracts. Go up another level, we only have 900. What does that mean? So you say, what? So the numbers are going down as price is going up on the aggressive buy side. So all of you ought to be going, what? You've got to be kidding me. Yes, I can see the buy pressure, the aggressive buyers slowing down. I can see it. The numbers are going smaller as price is going up. I have less buy action going on at the top of this bar. So as price slows, the aggression of the buyers starts to slow down. What else do I have? I got a red number right there, 73.44, highlighted in red. Well, a red number, first of all, it's on the bid side, which means it's what? Aggressive sellers. And why is it red? because I'm comparing aggressive selling diagonally to the aggressive buying at that time, because remember the bid and the offer are always one tick apart, and it's 2,300 versus 7,300. What? So at that exact point in time, there was 2,300 aggressive buyers. There was 7,300 aggressive sellers. Remember that talk about behavior? We got aggressive selling going on, and we've got aggressive buying slowing down. And what you're witnessing right there on that candle is the beginning of a shift in momentum, a shift in direction, a change in direction. Next bar. So this one here, when this comes up, I'm screaming bloody murder. I got to go short. I got to go short. I got to go short. Okay. But I'm always going to wait one more bar to just make sure that there's actually follow through on the sell side. And I have that 642 in red. That means percentage wise, 642 versus only 34 on the bid, on the offer. The aggressive buyers are not being very aggressive. This would become entry number one. Pow, hit the sell button. Now, these are 15-minute bars. So between these two, that's 30 minutes. You got plenty of time to evaluate your trade, because what's going to happen on the next bar? Next bar, we go up to the magic number. They are 61.8, your magic box, sell point, buy point, whatever. What do we have? We have more. We got all kinds of problems on the buys, on the aggressive buy side. We've got all these buyers, as price goes up, they keep trying. Look at, they're trying 5,000, 2,000, 34, 10,000. Oh man, those buyers are really stepping up to the plate. They are trying so hard to get this thing to blow up through this level. Maybe it's the high of the previous day. Maybe it's the overnight high. Maybe this is a support and resistance zone that you came up with from your chart. Again, I don't care what the origin is of this level is. I only care what order flow is saying about that level. And what it's saying to me is that the buyers are not aggressive enough to have follow through. Even with this 10,000 group of buyers, look on the other side, 11,000 sellers, 1,400 sellers in relation to what was happening on the bid. When that's called a stacked sell, that's again screaming, short me, short me, short me, sell. Again, no, I'm not going to bite. I don't trust anybody. I need confirmation. Okay, what do you got on the next bar here? You got a red 303. That's aggressive selling. It's a sell imbalance. There's my trigger. Trigger one, trigger two. So this is 30 minutes after I took my first contract. I take my second contract. Boom. There you go. Nice, nice trade. The bottoms. They give you similar patterns showing bottoms. Come up to a top. Lots of stuff. Lots and lots of stuff on this chart. Yes. So much data that your first shot, you're going, holy crap, man, there's a zillion numbers. How am I going to learn that? Well, it's color coded. There's color codes. Okay. There's summaries. This summary right here, it says 27.95. It's in red. It's negative. Guess what that is? We call that the candle delta. Okay. And what's really sweet about this is the net. This is the net of all the numbers in the candle, the aggressive sellers and the aggressive buyers. So on this bar, the aggressive sellers are net 27.95. Notice, my friends, this is a green bar, but this is a negative number. Yeah, negative 178. This is a green bar. Followed previously a very green bar, but still a green bar. So if you are looking at this just from a candle, you're thinking, okay, this is the pause before it pushes up. So we got the big push up. Okay, it retraces a little bit, slows down a bit. It's still green, getting ready to smack up. Well, no. On this bar that's green, there's actually net aggressive selling. So if you saw this, a lot of people are going, as soon as this bar opens, they're buying it because they figure this is the springboard. And they would be very wrong. They would actually be seeing price going up, but net selling, net aggressive selling actually happening. Okay, crazy, crazy, crazy. You can see that. You can analyze that. Once you've seen order flow, it opens your eyes to behavior, to price behavior, and what's actually going on a micro level. And this allows you to be able to, what? Filter your existing system's entries in no other way possible. That's never been available before. So if this was going to break out, I would not see sellers up here at the top. Okay, I might see the same shaped candle, but I may not see sellers. Then I know it's going to break out because no sellers are coming in. You have to have a response. Price goes up. It's a big advertisement. It's gotten so expensive. Hey, you sellers, come in, come in. Or it's going to break out. I want to see buyers, 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 and it's going to break out. The sellers are going to be like, no, 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 no. This thing's going to break out. I'm not selling it. And you will see those numbers reflected in these numbers. And all of this is happening in real time. Very, very, very cool stuff. Now, I'm going to even blow your mind one more time. So this is a summary. That's the delta. Tells us exactly what's going on. The number above it, the 2 by 0, that's counting the number of imbalances. So I look at this as saying there's 2 sellers and there's no buyers. And I say these are super aggressive sellers. If it's a 1 here, it's a 1 by 1. Okay. When these get to extremes, like this, a 5 by 0, there's no sellers. What's this thing going to do? It's going to keep going up, at least in the short run. If I got 5 blue numbers in here, that's buy momentum. It's highlighting that there is aggressive buy momentum going on. And that little negative, those little red lines there, we call this as an exhaustion bar. When this happens and you get that kind of momentum, you see how skewed the buying is? There's way more aggressive buying. You can tell that by the delta. The delta is way positive. Very skewed buying on this particular candle. Well, guess what? Very unlikely you can maintain that level of buying. So this is the first little chink in the armor that we're getting close to a top. So coming back here, I've got all kinds of clues leading into this area right here that price is about ready to reverse. And the beautiful part about it is most tops are 2 to 3 candles. So you have plenty of time to make your decision and get in. Bottoms are also, on average, 2 to 3 candles. So very, very, very crazy cool stuff. All right, let me see what I got. Trade management. Okay. So you can use this information that we just talked about in reverse. Okay. Knowing when and where to exit. Okay, so we got in somewhere over here, we're long. But guess what? Here's one of my trade locations that we've got in here, which is number 1, a target if I'm long. Okay, you'll see these levels. Price loves to fluctuate between these levels. So I get in at the bottom, I ride it up to the next level up. When it gets to the next level up, sure, it can keep going and trend up. If I'm long here, I'm looking for all the clues to get out. So I have 50, you can't see that very well, that's 5804. That's a huge number. That's telling me that, dude, there's so much, this is so overbought. Huge overbought. Then what happens to my buyers? They start declining. They get red at the top. Even better, look at this yellow up here. Oh my gosh, that yellow right there is saying that there is a buy trap, a retail buy trap. Why? It breached this level, and what happened? All those retail traders went breakout, and they all piled in and got trapped right at the top of the candle. And guess what? Brrr, it's going down. But not only is this a potential short entry, if I'm long, my buyers are getting tired. The buy pressure is starting to decline. There's a buy trap right there. All this along here is screaming, get out, take your profit, take your profit. So you can manage this information, manage your trade with this information in both ways. So it's not only to help you get in a trade, but it helps you manage the trade. What I like to do is I say that I am trying to figure out what the story is. Is the story a long story? If so, I go long. And I wait until the order flow gives me clues that the long story is changing, going to neutral, maybe then shifting to short. If I'm long, I get out. If I'm looking for a short position, I get short. Because the story shifts from long to neutral to short. That's just the way a change in direction works. Buyers are buying aggressively as the price is moving up. We finally get to we exhaust those buyers. Sellers start to come in. We neutral out. We have a couple of bars at the top, and then the sellers come in earnest, and we have a change in direction. This happens over and over again every day. And you can use it for both entries and exits. Now, I'm sure that you have a lot of questions, and we'll give a few minutes for questions at the end. But you're welcome to shoot us an email and ask any questions. It's support@NOFT-Traders.com. Simple. Go ahead. Ask questions. Do your due diligence. But I have one question. Here's the beginning of my pitch. Would you like to partner with me and master this type of trading? Well, it's discounted heavily. We talked about that at the very beginning. It's normally $29.99. Not going to pay that. Okay, this is a webinar special for $9.97, only because you're attending. Okay, the first question they ask if you call in or you go on the website, they'll have a standard price, and you'll have to have a code or a link to get to that lower price. Take our partnership to the next level by clicking on the link. Okay, so I'm going to put the link back into the chat here. Right there it is. You can go right to it. The Order Flow Pro, it's $2,000 being discounted. Very, very good deal. Oh, and you get the software. It's a license, so you get a lifetime license, which means that when NinjaTrader decides to go from NinjaTrader 7 to NinjaTrader 8, guess what? You get a new version for free. NinjaTrader decides to change something. It affects the third-party software, which is what ours is. We fix it. We give you a new version for as long as you own the product. So lifetime, we're not going to nickel and dime you. You're going to get the most up-to-date software available as necessary. No recurring charges or hidden fees. It's 100% guaranteed. Okay, so you actually have a trial period. You can try this thing out for 14 days, and you can get your money back. We have a no questions asked 14-day risk-free period. I'm not saying it's for everybody. I'm saying if you like it, buy it, test it out for 14 days. If you think it's crap, give it back. No questions asked. You're completely covered. No risk to you for the first 14 days. Now, after you've had time to evaluate it, we say, okay, we're not going to let you play with this for 6 months. Okay, you've already used it, right? You get that initial, is it for me? Is it not for me? Okay, we have very few refunds, I'll tell you that much. Occasionally, and they get their money, no questions asked. All the details are available at this landing page. Again, this is the link I put in the chat. It does work for NT7. There's an NT7 version. We still maintain NT7J, but it does not work for Sierra charts. Okay, it's only available for NinjaTrader and TradeStation. Now, I'm actually going to, on this next slide, I want you to see what it looks like. So it's a super simple, not busy landing page. Some of these landing pages can be 5 miles long, okay? It's got a few bullet points. That's it. Put in your name, number, Visa, MasterCard, boom, done, okay? Pretty simple to do. It works on NinjaTrader and TradeStation. Okay, so Stephen asked the question, how does our software differ from Market Delta? Okay, so Market Delta is one of our competitors. The difference is that we include education with our product. Okay, so when you get the product, it's got do-it-yourself videos on how to use it. Now, in addition to that, if you want more than just the videos, we have live classes that are available as a subscription, okay? So there's massive amounts of education that's available at your fingertips. Most of our competitors give you the software and say, thank you very much, and we never want to see you again. That is not our method. We do not do that. We want you to learn to be traders. We want you to apply our method to your trading system and make it work. Okay. It does, like I say, yes, it does work for NT7. No, at this time, there is no plans to extend it to Sierra Charts. I know a lot of you guys do like Sierra Charts. I like Sierra Charts as well. Yes, it is. You do have to purchase it to be able to try it out for the 14 days. So yes, it is. You do have to run it through your credit card. You will get charged, but then you will get refunded at the end of 14 days if you elect to ask for a refund. Yeah, I'm sorry, Gary. You have to pick a platform, and then you kind of have to live with it. So, and it's extraordinarily expensive to go across platforms, mostly because you have to completely reprogram, and many times because of the internal software architecture, you can't do the same things that you did in NinjaTrader. You can't do in TradeStation, and you can't do in Sierra Charts for a whole host of reasons. So we have it. This is the first year. We've always been a NinjaTrader platform people. But this year we added TradeStation. It actually came out in June, July of this year. We don't have a trading room. The only other thing we have is an education classroom that is twice a week for 1 hour, and that's a subscription service. There's no other. You can buy the software and do what you need. The education is there. You don't need to purchase anything else. Yeah, we have a white glove installation service. So once you pay, you get a link to one of our customer service guys, and all of our customer service guys are either have been traders at some point in their life and or are traders ongoing as they do. They are all traders. They will help you set up your workspace. They help you download, create the workspace within NinjaTrader, get the NOFT software loaded, and get you started. Okay, that's all part of the initial installation, and then you will have access to a whole host of education that's available video-wise. If that's not, you want more than that, you can always subscribe to the subscription service to get more education. Stephen, we only do this for 48 hours after the webinar. So you got to make a decision pretty quickly, but you do have time to do some due diligence. You can check us out. The product's a $3,000 product, so we can't discount it for everybody. I mean, we would go broke if we did that, but we do special webinars at a discount, and that's it. TradeStation does allow you to use bid-ask volume. So the education that comes with the purchase of the product is all do-it-yourself recorded videos. Okay, so you'll have access to those recorded videos. that comes with it. There's just, remember, people, there's all kinds of people the way they learn. Okay, some people can watch a video by themselves and they learn everything they need. Other people have to be shown. Okay, so we do boot camps, so people will come and I will meet with them, you know, on a one-on-one basis or a small group where they want to be shown how to do it. And then others need to have a very formalized lecture, you know, formal education that's every, in our case, Tuesdays and Wednesdays for an hour. They need that class to force them to come to class and to do the study. They don't have the self-discipline to you know, do it on their own. So they want the subscription service because it forces them to go to class. So we're trying to kind of cover the gamut of how people learn and have you know, multiple streams for you to learn, and you can pick which one works best for you. My favorite time period is a 7-minute chart on the ES. 7 minutes makes the candles a very specific size. Sometimes the candles are really big. They have lots of price levels in a specific candle. You can have too much information, sort of overload. So I'll drop my like lately I've been using a 4-minute because the volatility in the ES has been so high. I got to get those candle sizes smaller so that I can actually diagnose what the order flow is doing. So it depends. On balance, 7 minutes is my favorite time frame for all instruments. But lately, with the volatility in the ES, I've been dropping down to a 4-minute. So good question. Okay, so Fred asked the question, how effective is this product when the market is moving up and down so quickly? So you're trading the same way that you normally would. You're trading those trade location levels, and when price goes into those trade locations, then you're looking at the order flow to see if you really want to take the trade. The difference when the volatility goes up and it's moving up or down very, very quickly is your time frame to make the decision gets squashed. You have to make that decision quicker, and that makes trading a high volatility market more advanced, more complicated, because you're going to have to make that decision faster. Whereas if you're trading like the bonds, okay, you can probably get a signal, walk away for 20 minutes, come back, and still get a great entry price, right? It's just a much, much slower market. So your decision matrix gets squashed when volatility goes up. Still effective, but definitely takes an additional skill set for increasing that, that decision-making process to be quicker. Yes, you can do range charts. You can do tick charts, volume charts, range charts. Absolutely. Yeah, okay. Danny and Marlon, I am at my maximum here. I've been going for right at an hour. I think I've covered most of the questions on the chat. You know, click on that chart. I'll put it in the chat one more time. Check it out. Do your due diligence. I am all about doing due diligence. So check it out, and then make your decision as to what you want to do. You got 14 days to undo it if you need to. And that's all I got. Good question, Red Sox, Rich. His question is, can it discriminate block ticks broken up into partial executions? And the answer is no, it cannot. But I got to tell you, Rich, that if you have somebody that tells you, yeah, they have software that can, they're full of crap. And the reason being is that the level 2 data doesn't tell you who the opposite side is. So you don't know who the buyer is actually. So you can't, it's not tagged to that execution. You don't know if that execution was Morgan Stanley or, you know, a big boy, or if it's just Joe. And if you don't have that, it's all speculation as to whether that is a block where it's like 100 contracts that's been broken into 10 tick segments. So anybody who says they can discriminate is not telling you the truth, okay? Because that information is not provided by the clearing firm. It was not provided by the quote vendor, let's put it that way. All right, guys, I'm totally finished. Hope you guys enjoyed it. Hope you'll come over and check our software out. And remember, you can always email us. Let's see, let me go back to that email. Right there. If you have any questions, support@NOFT-Traders.com. Have a great evening, guys. See you later.